So let's talk about what we're expecting next week. That's the MPC meeting. Begins on Monday, decision to be announced on Tuesday. Yesterday, South Africa cut its rate by 25 basis points. Over outside this continent, we did see the Federal Reserve also cut its rate by 50 basis points. The Bank of England has held. And so what will Nigeria do? Well, I think a lot of people see it being held. But let's find out what Professor Ken thinks of this. Professor Ken, good morning, and thank you so much for joining us this morning. What do you expect from the MPC next week? Yeah. So what do you expect from the MPC meeting next week?
Yeah, please, I have to say something that we need to manage our expectations because one, Nigeria is experiencing stagflation. Now, number two, Nigeria is an import-dependent economy by design. Nigeria is struggling against all kinds of structural factors that are limiting the monetary policy space because the monetary policy can only go so far in dealing with the issue that they're addressing, which is inflation control. And bear in mind that why inflation is important is that it is the biggest single driver of millions of people into abject poverty and multiple deprivation. So it requires the highest form of attention. And that is why all the central banks is their first core mandate, control of inflation. Of course, there's another one, which is financial system stability. And in the case of America, they added employment. And then you have a fourth one, which is what they call secondary mandate, promoting sustainable economic development. That's where you get interventions from. But Nigeria case is so complex. Every central bank in the world knows how to manage inflation because it is a simple case for them. Some relationships are very linear. But Nigeria is not only experiencing stagflation, but the most complex interaction of all kinds of disparate factors. You have insecurity. You have infrastructure costs, you have energy, you have transportation costs, you have even the fact that there's huge speculation on our currency. So all of them should make us more cautious about jumping at conclusions. Now, let me give you one example. Monetary Policy Committee will decide by Monday, Tuesday on 3 parameters: monetary policy rate, and then you have the liquidity ratio, and then you have the cash reserve ratio. But those 3 are not the only thing that can affect inflation. Even within the armory of the central bank, it has loan-to-deposit ratio. It has a lot of other things, like, as you saw, closing the net open position of the commercial banks on dollar denomination, and then making sure that it affects the forex transactions. And then even the fact that they have closed down, the most important achievement of the bank, as in my own opinion, is that they have actually zeroed the spread between the between the forex, official forex, and because that is what is the most important to investors. That irrespective of where your forex rate sits, whether it's at 1,600 or 2,000, please close that gap, because that arbitrage is a big driver of speculation in your economy. So they've closed that. And then the next step is to help them manage the thing down, those rates down, so that the inflation, imported inflation that comes with it is attenuated. But having said that, you're asking me, what is my prediction? I will be 2 things that the bank is going to be looking at. One is how much of imagine a country where you have almost 100 trillion naira in circulation, and the GDP of the country is about 240 trillion. I mean, that is huge injection into the economy. It will take a finite time to run that down. Although many things are happening, the bank also has other tools like open market operation and treasury bills and all of that. But it will do its best to continue to suck out oxygen on the demand side. But of course, the second one is that, remember, ECOWAS macroeconomic convergence criteria, 10 of them. One of them says you have to have a positive interest rate. Here we are on negative territory because the MPI is on 26 points and then the inflation is on 37 points. You still have a gap of 11%. So a natural tendency is for the MPC to try to close that by constantly increasing to the point where there will be an inflection. That's one tendency. And then, of course, against that tendency, you have to look at other things. So it will not be surprising if they still decide to increase the rate, however small. It will not be surprising because they have these two major objectives. And don't forget that this second objective of trying to be on positive interest rate is also going to help the foreign portfolio investment. And you can see that foreign portfolio investment is inching up simply because we are constantly closing that rate and then giving them a stable forex rate, because that stability and closing the gap is far more interesting to those who are investing into our economy, foreign investors. So it is not going to be surprising if they do decide to increase that rate marginally. But of course, the best case scenario is that they hold. But definitely not to even consider bringing anything down right now. But let me tell you the saving grace. The saving grace is that the fiscal authorities have intervened, and we have been asking for fiscal stimulus, and now you have it. You have the small banks, SMEs, their threshold has gone up from 25 million to 50 million naira. Then you have all those tax VATs being removed, and then they don't have to worry about VAT until their turnover is over 50 million. And there's so many things on the consumption side, like the things that utility, the things you will buy with money for the masses. They've removed taxes from them, and then they whittle down 60 taxes down to 10, even going down to 8. Because as a matter of fact, 95% of government revenue is coming from only 6 taxes. So why do you have 60 taxes? So they've actually come in a very big way, the fiscal authorities, and they remove things like, the tax holidays, and said, no, do it on sector basis. Select key sectors and let them have so many, creative fiscal policy issues, policies are hitting the ground right now, which will help the monetary authorities, because they've all been saying, we need more. Do you not have it? Anything we want, we are having it right from the fiscal side of things.
All right,
so I'm
Prof.
much more hopeful.
All right, Prof. Obviously, we're going to continue this conversation and get another perspective on Monday. But hearing from you that we should be cautious as Nigerians, shouldn't be carried away, because we've seen South Africa cut rate. We saw Ghana cut rate even a couple of months ago. But we should look at our own, specific challenges. But thank you so much, Professor Kenife, for sharing your views with us this morning. Obviously, it's a continuous conversation, and we'll do it again on Monday.